Welcome back, YouTube. So, one of the major conversations that's been going on for the long term has simply been, are we going to have a recession or not in 2023? And so, the answer to that is actually kind of complicated, but we're going to take a look here at some of the readings that we're getting because it's actually possible that we can have the recession and the beginning of the bull market in 2023. So, let's talk about how. The the proper term is, I don't know if you guys remember, like back in 2020, we broke a record for having like the shortest recession in history. It was like 3 months and stuff like that. And I know that the dynamics were different because we were printing money and we haven't been printing money for almost a year now. Come March, April, there'll be a year without any QE. So I know the parameters are a little different, but oh my God. The parameters are a little different, but we have not had those injections. So now we're going to have to see, okay, what the economy is really made of and from a more organic standpoint. So this is kind of going to be that transition that we're going to have to go through in order to get to a more stable economy without QE, at least for now, because we know they're going to print money again. But the difference is it's possible for us to have what you would call a lowercase R on recession, or like a small r on recession. So it's saying that it's not going to be a severe recession or a deep recession or even a long lasting recession, but we'll technically have a period of a recessionary period where the economy kind of restricts a bit and slows down, but then has the ability to very quickly rebound and just kind of like resume in a positive pace. So it doesn't necessarily mean that we're going to fall off a cliff and go into the deep end for 2 years or something like that. And then all of the cycles and stuff that a lot of people are concerned about in crypto, stocks, all that kind of good stuff is going to be messed up. That's not the case right now. We don't have any hard evidence. And if you take a look here at this chart, you can see that the inflation is beginning to slow. This is the core consumer price index, monthly percentage. You can see right here, we're seeing, this is the last few months of 2022. You can see dramatic, pretty much decreases here. And so, as far as the consumer prices and inflation, so I want to read a part here really quick because it brings up a great point since we're talking about possibly having a 0.25% on the next hike. It says, for now, the staggering uncertainty has prompted Fed officials to come out in favor of further slowing, but not stopping their interest rate increases at the January 31st, February 1st meeting. Officials pulled back from their previous 3/4 point increases to a 0.5 point in December, and many support raising rates this time by just a 1/4 point. Moving more gradually would give policymakers more of a chance to see how the economy was developing, lessening the risk that they drive the economy off a cliff. So this is pretty much in a nutshell saying that they're aware that they can possibly over tighten and cause us to go into an actual deep recession, but they don't believe that they're at that point. So they're not in position just yet to pause and kind of see where the economy is going to go, but they're just kind of going to keep chipping away and dropping the actual percentage point that they're actually going to raise the interest rate. So we're more than likely, the market's pricing it in. We're going to look at a 0.25 basis point hike at the upcoming Fed meeting. So this is not going to be anything alarming. I think this is kind of what's expected. Even a lot of economists are opting for the pause option because they believe that with the last few months of data stating that, hey, look, inflation is coming down, we kind of take your foot off the gas here and relax, and let's just kind of see so that we don't put ourselves into a situation where we were fighting inflation for a year to get it down, and then you drive the economy off a cliff. And then how do you fix that? Oh, you got to turn that money printer back on. And then we just start the vicious cycle over. And even though that's technically how this all works, because we go from recession to money printing, and it's always an interval back and forth. So I can guarantee you sometime in the next 3 years, that money printer is going to come back on. But it's like, okay, let's not manufacture a recession. So, let's just kind of, pause and see where it's going. If it were up to me, I would pause. But again, I'm just a guy on YouTube here. I have no say so when it comes down to that. So more than likely, it's going to be priced in that we're going to do a 0.25 basis point hike. And that should be priced in. So as long as there's no surprises or shocks to the market, it shouldn't have a major effect unless Jerome Powell came out and said something, absurd or something. But, if he came out and said, hey, after this point 25, we're going to pause, that's going to be really good for the markets. You may even see a rally after that, because this is what technically we've been waiting on for like the last two meetings, really, last 2 months, is they're saying, hey, look, it's coming down, pause, pause, pause. And they're like, no, no, no. So if he comes out during his speech and says something along the lines of, okay, after this, we're going to pause and kind of see where things are headed, that'll be really great for the market. But I don't try and predict how he's let me down many times. So we'll just kind of take that as it comes. But overall, to summarize the video here, we can have a slowdown this year and still pick up on the bull market, especially if you're looking at crypto and stuff like that. That's typically scheduled to kind of take up in like late November, early December. That's when technically if you're looking at the cycles for Bitcoin and that being the leader of crypto and stuff like that, that's typically when that actual ascend will start. So that's late Q4. So we can have a recession and recovery before then. If you look at the video I put out yesterday, we were talking about the treasury yields and the 3-month and the 10-year, and how this indicator hasn't been wrong in over 50 plus years. And we crossed over 40% in December. So based off of that indicator, we're due for a recession within 12 months. So that would put us, somewhere this year for sure. But it doesn't have to mean that it's a deep recession. So if you're seeing these numbers and stuff like that, I wouldn't try and plan for the recession to the tune of like not investing or just saying I'm going to get better deals, because there's no guarantee on how that's going to play out. So you're more than likely going to do better with the status quo entry of investing consistently over the long term versus trying to time the market here, because this thing can swing at literally at the moment's notice. It changes with the wind, and you can end up being priced out or missing a great opportunity because you thought things were going to crash further and they didn't, or you went all in and it did crash and we did have a severe recession. And, it's just better to have best practices here. I put out a number of shorts about not investing 100% of your portfolio and not trying to time the market and stuff like that. So check that out here so that you're not going to you're not going to really put yourself in a bad position this year, because outside of the madness and the uncertainty that's going on this year, it definitely presents a lot of opportunity here if you know how to take advantage of it. So that is my macro long-term update. If you like anything I had to say, subscribe, like the video, share it with a friend. Check out my other videos on the economy, crypto, stocks, all that kind of good stuff. Check out the description section to get a link with Moomoo to open an account where you can get up to 15 free stocks. And I will see you in the next video.